Welcome to our second episode of the Profit Playbook. I'm your host today, Tracey Metcalfe, and today I'm also joined with Ed Gooderham. Today we're going to be looking at growing without killing gross profit. So Ed, looking at the assumption that growth always means profit. Sometimes when a business starts off and they invest in growing, they don't necessarily see that return straight away. So why is that?
So it's interesting you say growth always equals profit. That's not always the case. So many times clients will grow their business for turnover, but unfortunately that doesn't mean their gross profit increases or their net profit. So the starting point really is, what is growth? Some clients are obsessed with turnover. Some clients even look at number of staff and think that's growth. To me, the real growth is net profit, gross profit. Are you actually making more money from what you're doing? And therefore, trying to break that down for clients and saying, okay, let's have some goals that we have, but they need to be goals that are profit rather than turnover or number of employees.
That kind of goes with the idea of like being asset rich, cash poor in a way, doesn't it? Like turnover is, like you're saying, is not necessarily that driving factor of growing. So how do businesses look at that extra person coming in? Is it going to have that effect on the business of growth?
Yeah, one of the big issues when you employ another person is that you can often get this situation where obviously your costs increase first of all. You've got that extra salary, you've got the extra onboarding cost of national insurance, pension, even the recruitment fees, like we said earlier. So those costs all come as an extra cost to the business when you first start. That person might take 3 to 6 months to really grow into that role. I mean, if they're a sales role, you want them running on day one. But that doesn't work. And therefore, they need time to actually build that momentum up. You might not have had a salesperson before.
Yeah, it depends where they come in at
in
the business. And I'm assuming you could see a dip initially in those profits?
Well, you certainly see a dip in the gross profit as you've got that extra cost compared to what they're bringing into it. So it depends what job that person's doing. It depends how long it takes for them to become profitable, if you like. So they're bringing in more income than what they're costing. But hopefully what you will see is that initially you'll have this drop in your gross profit, but then hopefully very soon you'll get an increase in the gross profit as they become more of a resource for the business that's generating profits.
And by looking at that gross profit, is pricing really important to a business to look at?
Pricing is always very important, and gross profit margins are very important with the different income streams the client has. So we spend a lot of time talking to clients about looking at their gross profit margin, and if they're bringing more staff in, obviously those staff should be a variable cost unless they're management or sales, where they might be more of an overhead, or marketing, compared to somebody who's actually on the shop floor doing the work. So it depends which type of employee they're bringing in, if it's going to affect the gross margin for what they're producing, or is it going to affect the net profit. And that's just where you need to understand your accounts and what that person's doing for you.
These are the key indicators: gross profit, net profit.
Yeah. I mean, there's the old saying, turnover is vanity, profit is sanity, and cash is king. And yeah, clients just need to make sure their net profit is always increasing with what they're doing. And obviously that's a perfect world. And we unfortunately don't live in a perfect world. So sometimes you might employ that person with the right intentions, but then suddenly the market drops because the confidence in the market drops. Your industry goes through a slow period. I mean, hopefully there are some businesses that are very cyclical, but hopefully you realise that, so you employ people at the right time ready for that cycle. And that's the other issue. You might get a very seasonal business where you're busy between March and September, but you need to take them on in December so they're trained up ready for March, and therefore you're carrying an extra cost in your worst months, if you like, making your gross profit and net profit probably worse for those 3 months, but ready to have capacity for the busy period.
And you talk about seasonal work there. What about businesses like that? How do they manage that salary cost?
So if they can, which is very hard in the last few years, they might take seasonal workers on, or even agency workers for those 6-9 months when they're very, very busy and need those staff. Otherwise, you're on about taking people on, but you know that you're going to have this dead period in the winter, or depending on what season it is, when you're going to be quieter and carry those costs. And then you're trying to look for diversification, if you can, to other things those people can do. Because you don't want to be taking people on, laying them off, unless you're actually having short-term contracts like 6 months or 9 months. Which is where agency workers, although sometimes they cost a little bit more, might actually be more beneficial, because you can bring them in. But again, you need to train them. And is anybody available when you need it? Whereas at least if you're employing that person full time, they're available when you really need them, which is chicken and egg situation, sadly, for a lot of clients who've got seasonality in their business.
Again, what about subcontractors in that? Is there something you could use subcontractors instead of employing someone?
Subcontractors are a way to vary your costs, which is a good idea, so that you're only bringing people in when you need them. The problem, again, is subcontractors are very similar to agencies. Is there anybody out there available to do the work you want to be done? The clients I have who've got big seasonality issues, some are in manufacturing, some are in the hospitality industry. They're not normally subcontract things you can subcontract to people. So they're normally employees that you need in-house, train them up, and they're doing a task, or possibly the agency.
Talk about manufacturing. I mean, is there a way that people can monitor how those staff are doing, whether they're performing well enough?
So monitoring your staff is very important, to look at efficiencies and utilizations and recoveries in the different industries. So manufacturing, you're looking at output compared to how much time is taken to get that output. So most of my clients who are manufacturing would be monitoring how many hours those people are working, how much they're producing, and are they happy with that level of production. And that then helps when they employ another person, because they have an idea of roughly how much work that person's going to get out, if they've got the space for it. It depends again what they're doing. It might be a case that they're building bigger and bigger things and they need more hands, rather than one person just on a production line and they get 2 people on a production line. So it does vary for every different client, every different industry. So the other big thing with looking at numbers, you might get somebody who is exceptionally fast if it's a manual thing, and they're just a one-off. And you can't compare everybody, because we're not all the same. So therefore you do have to have an understanding that people are going to vary depending on different skill levels or different abilities. So that's the other thing people have to remember.
I suppose so, setting some sort of benchmark that...
Yeah, and you want some people above the benchmark. You want most people on the benchmark. If you've got a couple of people below, can you train them? Can you do anything to improve them, to make them faster, more efficient? If not, are you happy with that level, or do we need to change those people?
Is there occasions where you may take on staff, but just to have capacity to grow?
Well, this is a big issue, isn't it? So if you are planning to grow going forwards, then you need to think about what are the hurdles, what's stopping you growing. And some clients will take on people just to have that capacity ready for the next phase. And that's a cost they're going to carry. It's going to affect their gross profit, it's going to affect their net profits. But you won't get that growth otherwise. Because once you get it, the client wants you to actually deliver. And if you haven't got the manpower to do that, then you're going to upset your clients, your existing clients, and your new clients you might have brought in. And that's the next issue for them. And that's where you have to actually invest, take on those people, create the capacity, so when you get the growth, you can carry on flying.
It's looking at those long-term goals then.
It's about planning. It's about knowing what you want to achieve. Yeah.
Yeah.
There's also very interesting things in the market at the moment where a lot of clients are looking at, obviously, AI, which is very much in the news of late, and how can they make people's jobs more efficient? And therefore, you don't always necessarily need to employ another person. It might be a case that in a service industry especially, for our sort of jobs and lawyers and other people like that, perhaps actually you can use technology to do some of the work that people are doing at the moment. And then you're creating capacity without taking on more people, so you haven't got more cost. But because they're working more efficiently, more effectively, you're actually creating time to do more work. And that then increases the level of income and the profit for the business.
So that's looking at the processes in your
work environment. Looking at the processes, seeing if you can bring some efficiencies into it. So I know clients who've got the service sector again, who gas fitters, and they carry these little PDA machines now so that when they're on a job, they can take a photo before they start. They can tell exactly what materials they've used, how long they've been on that job. Literally when they leave, take another photo, send it all back to head office. Immediately an invoice is raised, they're on the next job. That then saves nobody in the office having to wait till people come back, say what's been done, what's been used, create the invoice. So you've now got that person in the office time saved as well, and they're ready going to the next job. And you've actually sent the invoice to the customer, and the customers might have paid you by card, and that's how business
almost
should run.
instant, like.
So there's lots of things that every industry can think about of how little parts of people's jobs can be automated and made more smooth and more efficient. And that's where you can create capacity without having to take on more stuff and more cost.
Is there any way like a business could test if they need someone else? Is it going to work out?
Well, it's interesting. Most clients, they get to a stage where they think, oh, I'd like to take this person on, but I'm not quite sure if we've got enough work for them or if that capacity is there in the long term. Again, I'd probably suggest they look at agencies then and see if they could hire somebody via an agency and take them on for a temporary contract possibly, and then with a view of actually employing them if that carries on after 6 months or 9 months. Obviously, you're paying a premium for doing that because the agency is making money out of this as well as you paying the employee their wage. But that gives you some flexibility of trying it without having that fixed cost for the long term. So if the work does drop off again, you can actually know and just stop the agency worker. So that's an option for people.
For people out there who haven't used agencies before, where do they go about? How do they find out about these?
Google's quite good for reviews, both of people who have used the agency, but also the individuals who have gone through the agency might have also left Google reviews. The other thing you could do is ask your accountant. They've got a wide range of clients and a wide range of industries. They should have somebody they know who's used agencies or they can recommend agencies. Most people in business also know other people in business, and sometimes just asking your fellow friends who are in business is a good port of call as well if they recommend people. You often find network groups and other things where the people know each other. So there's various ways people can find them. Obviously, you can look them up on the internet, but I'd always recommend they get a recommendation from somewhere. Yeah.
Thanks, Ed. It's been really useful. So going back to that growth question, what's your takeaway from today for the businesses?
So growth doesn't always have to cost, but it can do. So I've had clients who have grown their business and made themselves almost busy fools. So you need to make sure when you're growing, you're actually making more profit. And that whole adage, turnover is vanity, profit is sanity, is so important. But also, as you want to grow, if you're going to take on more and more employees, there's more and more cost. And you have to make sure that's the most efficient way to take on and grow the business. So sometimes you want to step back, actually, review your business and see if there's ways you can make your business more efficient. That might then create more capacity by looking at AI, if that could help, or other procedures, systems you can bring into the business. And then that might give you enough capacity to grow the business without any more cost. Or it could be a combination of the two. And therefore, you just need to make sure you've planned, you've looked, and you've reviewed which way is best.
It's that thing about, instead of being in the business, looking on the business, isn't it?
We tell it to every client.
Yeah. Thanks, Ed. Thanks for the advice today.
Thanks, Tracey.
I hope you found this episode on growing without killing profit really useful today and that you can apply it to your business. If you want any further information, please feel free to contact us. But otherwise, thanks for watching and don't forget to like, share and subscribe.